Welcome to this edition of NewsHour, 60 minutes of news from China and around the world, here on CCTV International. I'm Li Dongning in Beijing. European leaders have vowed to join forces to fend off the financial mayhem that snowballed out of Wall Street and is now hitting banks in Europe. The leaders of the EU's 4 largest economies concluded an emergency summit in Paris, and they say they will work in a coordinated way to tackle the worst financial crisis since the 1930s. Li Xiang has more.
The summit followed the approval on Friday by the U.S. Congress of a $700 billion bank bailout plan to tackle a financial crisis that is now spreading to the world capital markets. France, Germany, Italy and Britain were represented at Saturday's meeting, along with the European Central Bank and the European Commission. French President Nicolas Sarkozy was the host. He said he and leaders attending the meeting had agreed governments needed to act in a coordinated manner.
We decided to sign a formal engagement to commit our heads of state and governments to support the financial and banking systems facing this crisis. Each government will act with its own methods and means, but in a coordinated fashion with other European states.
The leaders of the 4 major European powers said they would take all necessary measures to ensure the soundness and stability of the banking and financial system. They asked the EU regulators to act quickly and be flexible when judging massive government bailouts for banks. They also agreed to take urgent action to address the impact of the crisis by speeding up the release of a €30 billion package. This is aimed at freeing up lending for small and medium-sized businesses. The EU nations also demanded stronger global financial governance and better coordination. And they call for global leaders to meet as soon as possible to start overhauling the banking sector. CCTV.
And the Central American Integration System Group, or CECA, has met in the Honduran capital, Tegucigalpa, to discuss the effects of the U.S. financial crisis on the region. Heads of the state from El Salvador, Costa Rica, Guatemala, Nicaragua and the Dominican Republic joined Honduran President Manuel Zelaya, who hosted Saturday's meeting. Zelaya said the region had to protect itself from the financial problems of the United States. Central America shares a free trade agreement with the U.S., which buys the bulk of its exports. And at the summit, a plan was signed to strengthen the region's commercial sectors and the credit lines within the bloc in order to face the growing financial crisis. Meanwhile, China's central bank has also responded to Congress approval for the big bailout, saying it is hoping for even more cooperation and coordination both with the United States and other countries. A spokesman from the People's Bank of China says the central government is scrutinizing developments in the financial crisis and is keen for stability and healthy growth to return to Wall Street. Chinese authorities are also hoping that buyouts of toxic assets will go ahead as soon as possible to thaw out frozen credit markets and bring back investor confidence. The spokesman for the PBOC also said both China and the United States will profit from global stability and that China is willing to work together with the United States to tackle the crisis. And the central bank said it had already taken measures to reduce the impact of the credit crunch on China and would continue to do so in the months ahead. The PBOC is stressing that the fundamentals of China's economy remain unchanged. Markets are secure with a fairly adequate liquidity.